Hey guys, welcome back to a brand new video. I'm RexFinance, and well, I made a $10,000 short-term bet on CleanSpark, ticker symbol CLSK. So in today's video, I'll be describing the exact short-term bet I made and why exactly I made that bet. But first of all, I just want to say thank you to all of you watching this video right now. I know over the past few weeks, a lot of the video content on this YouTube channel has been about the macro environment with the stock market. I just felt that it was important to address the macro trends and macro environment outside of the individual stock picks that I have on this channel. But at the same time, I do realize that the majority of my audience is here to listen to me break down individual stocks. But as a thank you for sticking with me through that time period, I'm going to be giving away 5 free 1-month memberships to the Rex Nation community and Discord. To give yourself a chance to win this giveaway, just simply leave a comment down below saying anything you want about the stock market or CleanSpark. It's up to you, but 5 lucky winners will be picked to get all of the perks that come along with the Rex Nation membership for a 1-month time period. I'm not one that likes to waste my viewers' time, so with that said, I just have one last housekeeping item, and that is, if you guys are new here or returning and not yet subscribed, I would greatly appreciate you hitting that subscribe button down below. Without further ado, let's just go ahead and dive into this. Alright, so let me just give it to you straight. I made a $10,000 short-term call option bet on CleanSpark, and because this is a short-term bet, and it's very, very volatile, I am not going to be giving the exact details of the exact call options that I bought. What I will tell you is that I purchased $10,000 worth of these call options, and they expire on February 18th. If you do want the exact details of the exact call options I purchased, I did make those details available to all of my paid members, so that's just more incentive to leave a comment down below and maybe even win a free month of the Rex Nation membership. But I included screenshots and all that stuff to back up what I'm saying here if you want the exact details. Getting into this video, the first thing I have to mention is that I am not a financial advisor. I'm simply a 20-year-old kid speaking through a microphone to you guys watching this video on YouTube. Nothing I'm about to say is meant to be financial advice. These are simply my own thoughts, opinions, and ideas, and I could very well be wrong about everything I'm about to say in today's video. But first things first, for anybody that maybe hasn't heard of CleanSpark before, CleanSpark is a Bitcoin mining company and also an energy technology company. They have renewable energy and microgrids and things like that at their roots, but the Bitcoin mining side of their business is currently the biggest business segment by far. To put this in perspective, CleanSpark is currently mining over 10 Bitcoin per day, and their all-in cost to mine a single Bitcoin is only about $5,000 to $6,000. So that means that the current Bitcoin price of over $37,000 per Bitcoin, CleanSpark is bringing about $30,000 of that to the bottom line. But to really explain why I made this move, I first need to show you the current valuation of CleanSpark in comparison to the other competitors in the same industry. First of all, if we look at CleanSpark's most recent quarterly report, we can see that stockholders' equity exceeds the current market cap of the company on the public markets. The total stockholders' equity of CleanSpark exceeds $305 million, and the current market cap of the company is only $280 million. There is no other Bitcoin mining company out there that can brag about this, that can brag that their stockholders' equity exceeds the current market value of their entire company. To break down stockholders' equity, basically this means that the company's total assets minus their total liabilities equals more than the current value of the company in the public markets. That is pretty extraordinary. But now, if we really want to compare CleanSpark's current valuation to other miners in the same industry in particular, what we can do is compile a list of 5 of the top publicly traded Bitcoin mining companies out there, take their current market cap or their market value, and divide it by their current Bitcoin production, otherwise known as hash rate. And that is exactly what I've done with this spreadsheet that I've created. We can see when we look at this spreadsheet and the ratio I came up with that CleanSpark is pretty much by far the most undervalued miner currently, and this all plays into my short-term bet on the company. But let's break this down even further. What we can see is that for every 1 exahash of mining power, CleanSpark is only getting about $140 million in current valuation. Bitfarms, on the other hand, is definitely the second most undervalued miner in this list that I've compiled here, getting only about $267 million of valuation for every 1 exahash they have. HUD-8 is about $484 million, Riot Blockchain is about $540 million, and Marathon Digital gets about $630 million in value for every 1 exahash of mining power they currently have. Now, I know down in the comment section below, I'm going to get questions and concerns saying that this isn't taking into consideration any future growth, any future hash rate growth. And that is true. But this doesn't matter as much as most people think it does. What always matters most in the stock market is earnings per share. That's what Wall Street looks at, that's what institutions look at, that's what big money managers in general look at, is earnings per share. What earnings per share is this company going to deliver for me as a shareholder? And I can tell you right now that CleanSpark's earnings per share is probably going to triple that of anybody else on this list. And that is despite any future growth in hash rate these companies have. I know for one, CleanSpark is planning on doubling their current hash rate by the end of 2022. That's scaling up quite a bit. But I know Marathon and Riot and all these other companies are planning on scaling up way more than 2x their current hash rate. But I remind you, that hash rate does not always equal earnings per share or the profitability of the company. All of these other miners on this list are going to be hurting shareholders in one way or another, financing their extreme growth that they're planning out. And that is assuming they even reach the growth they're planning out. For example, they either have to take on massive amounts of debt, which increases the liabilities of the company, decreasing the stockholders' equity in the company. Or they have to dilute shareholders millions and millions of dollars worth of shares, which brings their earnings per share down even more. CleanSpark has the least shares outstanding currently out of any publicly traded Bitcoin mining company, which in and of itself will boost their earnings per share way up. And this is actually exactly why I made a short-term bet on CleanSpark, because their next quarterly report is going to be released in early February. Right now, the consensus from Wall Street is that CleanSpark is going to report positive earnings per share of 44 cents, which in and of itself is very good for the Bitcoin mining industry. But I actually think CleanSpark is going to far surpass that 44 cents earnings per share number and be somewhere between 60 cents and $1 of earnings per share this quarter. Let me tell you why. First of all, this quarterly report is for the months of October, November, and December. And if we trace it back, we can see that CleanSpark actually started selling big amounts of Bitcoin in October, and this continued every month of the quarter. And why this is a big deal is because anytime you sell a digital asset, that is a straight gain that goes to your bottom line as a company. In particular, CleanSpark has sold over 900 Bitcoin in the calendar year of 2021, and the bulk of that number came in the last 3 months of the year, aka this current quarter that they are going to report on in the first 2 weeks of February. We also know that the bulk of the Bitcoin CleanSpark has sold was sold at or above $50,000 per Bitcoin. In December alone, they sold about 414 Bitcoins at an average price of $49,791. So if we do the math on this, and let's just say they sold 800 Bitcoin total in the final quarter of 2021, we would come up with $40 million in gain from the sale of those digital currencies. That is a lot of gain. And remember, this company has just over 40 million shares outstanding. So based on this fact alone, not considering any other Bitcoin mining revenue, not considering any other expenses, it appears that CleanSpark is going to be pretty close to that $1 earnings per share number for this quarterly report, which gets me very excited because again, that far exceeds the 44 cents consensus from Wall Street. And anytime you exceed Wall Street's expectations, good things happen to your stock price. Other things that have contributed to my short-term bullishness on CleanSpark is the fact that I feel that Bitcoin has pretty much bottomed here in the mid $30,000 level. And the fact of the matter is that more and more millionaires and billionaires and countries and companies are buying Bitcoin. They're buying into Bitcoin. So personally, I just can't see Bitcoin dropping much more than the $35,000 plus it's already dropped from all-time highs. I just can't see that happening. So I made this bet when I felt that Bitcoin had bottomed. Another item that has led to my short-term bullishness is the fact that this quarter CleanSpark will not have to write down any of its assets for impairment charges. If you guys aren't aware, if the price of Bitcoin drops over a quarter, the reporting company has to write down the value of whatever asset that is. In this case, it would be Bitcoin, but because Bitcoin was flat quarter over quarter, it means that CleanSpark is not going to have that impairment charge, which decreases the profitability of the company on paper. We're not going to have that charge, and that's a pretty big charge that we're avoiding this quarter, again, boosting the profits and boosting the earnings per share for this quarterly report. Now, at the time I bought these short-term call options, this news that I'm about to share with you had not yet hit the press. I had no idea it was going to happen, but this just adds to my bullishness even more. Today we got news that a big fund manager is going to allocate 9% of their ETF to CleanSpark. If we look at the ETF fact sheet from Valkyrie, we can see CleanSpark makes up 9% of this portfolio. In other companies like Marathon Digital, they only make up about 4% of the portfolio. And this really gives me confidence because this means that Wall Street and big money managers and institutions and funds are officially looking for that value. Right now, CleanSpark is that value. And I made this mistake in 2021 saying that I felt valuations would correct, where I felt that CleanSpark's valuation being so undervalued compared to other Bitcoin miners would correct even though the markets were in a downturn. But what I learned is the fact of the matter is that most of the time valuations won't correct. Company valuations won't correct to the rest of the industry in a downturn. Most of the time it will happen in an upturn. So right now, although 2021 was a big year for me, allocating my portfolio to stocks that I felt are very, very undervalued compared to its competitors, I think 2022 is probably going to be the year where I see the real fruits from this. Another note here is that this ETF focuses on the renewable energy side of Bitcoin mining, which again, at the beginning of this video, I prefaced by saying CleanSpark has renewable energy at its core. And that is why CleanSpark is making up such a large percentage of this ETF. And I know individual shareholders, retail investors, we might not care about ESG or environmental social governance. We might not care about that stuff. But for funds and institutions and big money managers in general, they're pretty much required to pay attention to this stuff now. So the more ESG focused a company is, the better it is for institutions and the better it is for retail investors because the institutions and big money managers are really the ones that drive the market. Another thing that I need to mention is that this ETF is yet to be launched. Currently, they're just getting interest in gathering funds and raising funds to officially launch this ETF with investors' money. So when we see that 9% of this ETF is going to be made up of CleanSpark, depending on how much money is raised to invest into this ETF, that is a lot of shares of CleanSpark that is probably going to have to be purchased by this fund. And remember, CleanSpark is already a low float. They have very few shares outstanding at just over 40 million shares outstanding. This could put tremendous buying pressure on the stock, and this is again adding to my short-term bullishness, depending on when this ETF is officially launched. But all of this being said, please do not forget the fact that I'm not a financial advisor. Please do not blindly follow what I'm doing or what I said in this video, because there's equally likely a chance that I am very wrong about all of this, and I lose all of the money I've put into these short-term call options. Short-term call options are very volatile, and most of them expire worthless. You lose a lot of money generally with short-term call options. This is a big bet that I don't recommend for anybody. But anyways, remember to leave a comment down below for a chance to win that free month of the Rex Nation membership. If you enjoyed this video, hit that like button down below. And again, if you guys are new here or returning and not yet subscribed, I would greatly appreciate you hitting that subscribe button down below. With that, I hope you have a great rest of your day. Peace out.